We're here on the trading floor at the New York Stock Exchange on Thursday afternoon. This is a holiday-shortened week with Good Friday a holiday here in the U.S. So joining me now is Tim Anderson of TJM Investments. Tim, great to have you here today.
It's nice to talk to you.
Well, it may be a holiday-shortened week, but we did get plenty of tradable fundamentals as well as some technicals. President Trump did make some comments that were seen as a reversal to what he promised during his campaign. And we saw a little bit of dollar weakness following that, but following this morning's economic data releases, we did see the dollar pair gains. So what do you make of Trump's latest comments?
Well, I think that his comments on the dollar are really just trying to talk the dollar maybe in a certain direction without it doing anything about it specifically. I think comments like that would typically come from the Treasury Secretary. But I think when you have a person like Trump, who's a very accomplished business person with a lot of business globally, he's got a pretty good handle on how currencies play into the dynamics for a lot of global businesses. And I think that he's just trying to maybe stop the dollar from having a very steep move higher. I think in reality, the dollar hasn't really had much of a move the last 2 years. It's actually maybe down 5 or 10 basis points against a couple of different baskets. But clearly, a lot of the move in the dollar recently could also be because of euro weakness for a number of different reasons over there.
Well, Tim, we could spend an entire segment dissecting the comments by Trump. We did get some interesting comments regarding the Fed Reserve about how Trump did want rates to remain low. But we did get bank earnings, which came in mostly better than expected for JP Morgan as well as Citi, but Wells Fargo did come in mixed. And we did get economic figures, and the PPI figures did pull back slightly in the latest month. So what do you make of the fundamentals?
Well, I think that clearly for the banks, at least, Citigroup and JP Morgan both highlighted a much better results from their trading operations. And clearly in the first quarter, we had very strong trends that you could see were probably going to extend themselves through most of the quarter. I'm sure they benefited from that. I'm sure they also benefited toward a little bit of an uptick in investment banking business, and maybe in some advisory businesses, as it's the first quarter of the year, it's the first quarter of a new administration, and I'm sure a lot of companies were like, let's get going now on some things that we maybe have been holding on the back burner for a while. So it'll be interesting to see now if those results can continue in to the second quarter, given that the curve has actually steepened quite a bit just in the last month.
And looking ahead to...
I'm sorry, I misspoke. Given that the curve has actually flattened quite a bit during the last month. At the 10-year hit 2.2% earlier today. It was actually 2.6% before the Fed hiked rates in the middle of March. So I think that something that might catch a lot of people off guard is that short-term rates could go up. It's not necessarily going to force longer rates up.
Okay, Tim. Well, thank you so much, as always, for insight and analysis, and have a great holiday weekend.
You too.